Did you guys see that? Did you guys see that 200 pip move? Crazy. The cool thing about it is that I was able to actually tell the S&G members in my group about this potential move. I'm going to show you exactly how it is that you could have caught this move as well. 200 pip move to downside for GPUSD, and also a huge move with gold itself. I'll go ahead and show you guys some examples that I went ahead and showed to my private Telegram group, so that way you can see kind of the hints I was giving them that market will more likely continue going down for GPUSD and also for gold. But with that said, let me show you exactly how it is that you would have been able to catch this 200 plus pip move.
Yeah. People knowing that we lit.
Wait up a quick second. Before we get into the video real quick, as always, remember to stack them likes, stack them comments if you guys have any, and subscribe. Let's get to it.
Nigga, they knowing that we lit. Yeah. Money coming in, people knowing that we lit. Do it for the fam, we gon' die for this shit. It's some real ties when we pull up with the click. It ain't no surprise, they gon' love you when you rich. Money coming in, people knowing that we lit. Do it for the fam, we gon' die for this shit.
Alright guys, let's get started with the video. As I was saying, I did mention this out on a webinar that we had with the Stack and Grow members. We did go ahead and speak about GBP USD going to the downside, at least into the zone, and potentially continue on moving even further. Now we also can see how market went ahead and had that move to the downside, 200 plus pip move to the downside, which is great. And we have gold. We can see how I was mentioning for gold to potentially distribute up in this area and continue moving to the downside. As you guys can see, we have Monday discussion sessions. In this session, I was talking about liquidity and potential areas that market will go ahead and potentially move into for the start of this week. Now, in these sessions, I do go ahead and talk about in our webinars, educational webinars. There are signals provided, trade ideas, a lot more content if you guys want to go ahead and join that. It's going to be in the links down below, which is the AI Stack private group. So let's get to it. As we can see right here, we're going to go ahead and go through GPUSD real quick. Before we go into anything, I want to show you guys exactly why it is that we were looking for potential bearish scenarios. Now, on the daily time frame, one thing that we do want to be paying a lot of attention to is exactly how we were able to close beneath these lows. Now, what I am looking at is the close of the candle. As you guys can see, the close of the candle is right over here, and then the close on this candle is right below our previous low. So considering that market has now created a new lower low for market to potentially continue on moving down, okay, with the overall structure levels. Now we are on the daily time frame, and many people right here would be getting confused as far as wanting to continue on buying to potentially come up a little bit higher instead of wanting to actually look for selling positions. Now, one thing to take in consideration in these case scenarios is what are the probabilities of market to come higher than they are to continue on going lower. You got higher probabilities for market to continue going lower just due to the fact that we are in a bearish market structure. So you do want to respect that. Now, we had come into certain areas almost fulfilling these zones of imbalance that we do pay attention to. And over here, going on to the 4-hour time frame, things that we did look into was what market had done. Okay, market had broken previous structure in this area, but at the same time, market was coming up into a nice zone. And this zone over here is actually a 1-hour point of interest. So we go over to the 1-hour time frame. We can see how there was a nice 1-hour point of interest in which we had respected previously. So one thing that's important as well is to understand time frame correlations. In this case scenario right now, our time frame correlation going from the bigger time frame such as the daily, we can see how market is bearish. Going on to the 4-hour time frame correlation, the overall time frame correlation on the H4, we are bearish. However, we had broken structure, so this is a little counter trend trade to the upside to come into discounted levels for potential continuation of sales. As you go down to lower time frames such as the 1-hour time frame, on the 1-hour time frame, you now had evidence of market breaking structure. So we had bullish structure. We can see how market broke this overall structure over here. We can see how we broke that. We had now bullish structure. And then from that case scenario, market created a little structure and then broke that structure over here. So now we are in bearish structure. We come back into retracement up into a nice little pullback right here that we would be taking in consideration. And for a potential continuation to the downside, taking out these lows over here. So as you may pay attention to, correlation of time frame is very important. The daily time frame was correlating. The 1 hour time frame was correlating. However, the only time frame that was not correlating was the 4 hour time frame, which is a H4 time frame. Now, one thing that you can take in consideration on the H4 time frame is how market was able to go ahead and provide us some price action. Okay, so price action was telling us that market was looking for a bearish scenario. As we can see, a nice 3 candle variation right here, bearish variation to the downside. This was telling us, hey, market wants to keep moving down. If we do not have an entry right here, if you do not enter right here, market will more likely continue going down. And at the same time, one thing I did mention to my group is that market had created such great liquidity down over here. This liquidity was clear. This was a great clear liquidity, as you guys can see right over here. Look at how even these lows are right here. So lots and lots of liquidity that was provided in this area, and that allowed me to understand that market will more than likely move to a downside because of what it had created. Now, is there possibilities for market to move to the upside up into this area? Of course there is. However, it has greater possibilities for it to go down than it does to go up. And on top of that, if you go ahead and put in consideration a risk to reward ratio, if your stops were right over here and your profits were over here, that's a nice at least 1 to 4, 1 to 5 risk to reward ratio. So in that case scenario, it makes sense to look for those selling positions. And then on the 1 hour time frame, we always like to take in consideration our time and price, right? We want to be able to see how time is correlating with our price action, and we want to be able to understand that we are in a fast moving session. So in this case, are we in our London session? Are we in our New York session? So on and so on. So I'm going to go ahead and just change this over to New York just so that way you guys can see. Oh, sorry, I put the brakes on. So let me take those brakes off. And then London session, okay? Right over here, where is the start of London session? Where is London starting to move? What time do they open? Around 8 o'clock? Okay, cool. So we have that move right here at 8 o'clock. What did market do pre-London? Pre-London, we had a nice little move to the upside. 8 o'clock, what happened? We broke these 1 hour structural levels. Okay, going down into the 15-minute time frame. What could you have spotted right here? You could have spotted that market was breaking our previous structure. Market did go ahead and created a accumulation of price and tapped into that same accumulation of price, in which if you were to look for short opportunities, could have been anywhere from that accumulation of price, and then your stops could have been anywhere above that accumulation of price. So in this case scenario, 12 pip, or if you wanted to be safe, you could have gone ahead and played it to the previous high level, so about 20 pips. And as we can see how market moved forward to the downside, areas that would have been targeted first, liquidity zone. So in this case scenario, that liquidity zone for a potential one-on-one risk to reward, and then down into our previous lows. So in this case, a nice 1 to 3 risk to reward ratio. Now, if you did go ahead and ended up holding this, then you would have been able to catch a 1 to 7 risk to reward ratio. Nice risk to reward ratio for GBP/USD. So with that said, let's go over to gold real quick. All right, let's talk about gold. What was I seeing on gold? Now, one thing that I was talking about in the webinar session I had with the Stack and Grow community was that market was creating nice liquidity up into the zone, and we were coming into an imbalance zone that we had been rejecting. So all we were waiting for is for market to come into points of interest, as we can see right over here, how we have a nice point of interest to later on be rejected from. And we clearly had that rejection in this area right here, and we had another rejection in this area right here. So either or, if you were to enter off of this rejection right over here, you could have gone ahead and put your stops right above. But one thing that we do take in consideration is, okay, where are we at in the market? What are our sessions? So on and so on. So this was coming almost towards pre-London, and we wanted to go ahead and enter right there. I more than likely would have been looking for entries on the price action, stops right above, and then TPs right underneath our lows, leading us for a 1 to 3 risk to reward ratio, a nice 1 to 3 risk to reward ratio. So for those two trades, you would have combined had a 1 to 10 risk to reward ratio. Nice way to start the week. So with that said, guys, I hope you guys enjoyed these quick breakdowns. I hope you guys were able to understand how it is that you could have potentially catch this 200 plus pip move on GBP/USD, and then on this case scenario, 147 pip move on gold itself. They were nice setups, and they played out during London coming down into New York session. So as always, remember to stack them likes, Stack them comments if you guys have any. And don't forget to subscribe. I'll see you guys next time. Have a great one. Bye-bye.